Hey everyone, welcome to another episode of Valuing Stocks. This week I am taking a look at Facebook. It's been a while since I've done a DCF of Facebook. I've been an investor in Facebook for quite a while, for the last couple of years, been in and out, but mostly in. So let's just dive right in. I know in the past my videos have been a little long, so I'll try and keep it a little bit shorter. Facebook, most of you guys are familiar with it, but most people that I come across do not really have an understanding of the underlying fundamentals, and so I'm hoping to help you wrap your mind around them and assess a fair value for the stock. Now, by way of disclaimer, I am not a financial advisor, and I'm certainly not your financial advisor, so take everything I say with a grain of salt. This is for educational and entertainment purposes only. Hopefully it is a bit entertaining, at least to get you through the end of the video. So right here you can see I've got a chart of daily active users for Facebook. You can see that they have been growing steadily, even though it seems like Facebook has been around for quite a while now, and it seems like they're running out of people who are not on Facebook. I know I certainly know very few people who do not have a Facebook account. But this is daily active users across their properties and Instagram, Facebook, Messenger, WhatsApp. So they've got 1.5 billion daily active users. I remember, I think when I first invested in Facebook, it was down here in the 2016 end. It was only like 1.2. So added 300 million users over the last 2-3 years. So what I want to point out here is kind of the geographic breakdown, right? And so you can see that surprisingly, you may not think that the US and Canada are the smallest portion of Facebook's users. Then you've got Europe, is the next biggest. You've got the Asia Pacific area is actually the biggest. I bet you didn't know that. A lot of you didn't know that, right? And then you've got the rest of the world, who's also bigger than both the US and Europe. And I also want to point out that daily active users is different than monthly active users. Monthly active users, I believe Facebook has over 2 billion of those. So monthly active is people who kind of use Facebook at least once a month. Daily active, or these people are actually using it every day, right? So that's quite amazing to have that many daily active users. So quickly, I want to go back. I want to go over a couple other charts. Revenue. So you can see revenues have been climbing steadily despite all of the kind of rhetoric around Facebook being evil and privacy concerns and whatnot. It seems like it still has not really impacted the business as far as revenue growth goes, although Facebook keeps saying that that revenue, not Facebook, revenue growth will be slowing. So it's still going to increase, but at a slower pace going forward, which is expected as a company grows and becomes this size. There's only so many people in the world, right? You've got like what now, 8 billion plus people in the world, and you've got almost a quarter of those who are on Facebook. So it's hard to get much more. But you can see that they've had a great Q4, very nice number there despite all those concerns. So average revenue per user, I want to show you this. So worldwide, it's a little over $7 per user of revenue, right, that they're getting. Most of that's from advertising. The United States is by far the leader in this, right? So if you're in the United States, Facebook makes about $35 off of you a year in advertising revenue. In Europe, it's quite a bit less, and so I think there is room to expand. in Europe, Asia Pacific. Remember, there are a lot more users in Asia and the rest of the world, right? And those two have ample room to grow. As you can see, it's only down at the $3 to $2 range there. And so I would expect that's where a lot of the growth is going to come from, not so much from US and Canada. That's pretty much tapped out. Income from operations, you can see that, sorry, I gotta make sure I'm still recording here. The income from operations has grown pretty steadily, but has kind of stalled. You can see Q4 2017 to Q4 2018, not much growth. And a lot of that is because the expenses have grown. You can see the operating margin has decreased. So this is what is concerning investors, as privacy is more important, as monitoring and making sure the fake news is not there. That has a lot of cost. Facebook actually has to hire a lot of people to monitor. Those added jobs are added cost, and so their expenses are going up. How far these expenses will continue to go up is to be seen, and that's the main drag on the stock. Although after Q4, many of you know that there's a nice pop in the stock, which I appreciated. And a question today that I want to answer is, is Facebook fairly valued, overvalued, or undervalued at current prices, which is around $162 today. Earnings per share, you can see, have grown, but kind of have stalled out, but then just had a nice pop in Q4. Hopefully that will continue. Like I said, expenses are going up, but I think, as I'll explain later, that at some point expenses are not going to continue to climb, and there'll be a leveling out effect. Another thing I want to point out is capex, so capital investments that Facebook has made. And capex, as you know, are investments are different from expenses, because they're investments in equipment, things that last longer than a year is kind of the technical definition. So, buildings, equipment, things like that. Data centers. Data centers are a big expense for Facebook, but as they've been building it out, you can see the pretty high increase in capex, which I also believe will level out. All right, so those of you who've seen my past videos will recognize this sheet where I kind of lay out the numbers and the story for Facebook. So you've got to have a story, like I always say, otherwise you may not have any movement in your stock if there's not a good story to go along with the underlying numbers. So it's both numbers and stories are important, because stories sell. So Facebook, Facebook and Instagram are the king's social media. Snapchat is kind of a puny little guy in the corner compared to Facebook. They've had their struggles of their own, keep getting ripped off by Facebook with the Facebook stories and Instagram stories. So Facebook, I think, will be the dominant player. I mean, all this increased regulation around privacy, social media, your data, I think, that is going to hamper Facebook and cost Facebook more. But in the long run, I think that, like I say here, fierce regulation may keep competitors out of the game. Kind of becomes a barrier to entry, right? So for up-and-coming players, Snapchat or any other new social media platform is going to face the same problems with data and privacy, stuff like that. And if it's becomes even more expensive and hard to play in this arena, then that just solidifies Facebook's position for years to come, right? So let's kind of go over the numbers here. This base year, just know that this is actually the 2017 year for Facebook, because at the time I did this valuation, my valuation, I did not have the Q4 2018 numbers, which means I did not have full year 2018 numbers. So my base year was the year prior, which was 2017. So revenues actually for 2018, as I note here, we closed out the year around 55 billion. My numbers are not exactly accurate because mine was on a projection basis, and I projected pretty close to what the end number was. So you got revenues growing, as you can see here, 20%. I'm guessing, not guessing, but it's a good educated guess over the next 5 years. Then I've got growing revenues growing, slowing down to 4.6, then 3 being kind of the inflationary rate of change, right? So I think in 10 years, Facebook's revenues get to about 87 billion. That's this number over here. Let's try not to move this around so much to make you seasick. Operating margins. So you'll see my operating margins is higher than the operating margins you're going to see on financial websites and other places. The reason for that is I make an adjustment. Whenever you have a tech company like Facebook that spends a lot of dollars on R&D, I believe last year they spent over $7 billion on R&D expense. Professor Oswath Damodaran, who a lot of you who've followed my videos know I'm a huge fan. He's a professor at NYU, teaches valuation, which is kind of what I have done in these valuations, follow his methodology. So he says you need to capitalize R&D expense, right? And if you think of it, R&D expense, those expenses are for things that have benefit to the company for more than just the year in which you spend the money, right? So if you're building out some new technology, that's going to have benefit for your company for years to come. And so instead of expensing that whole cost in the year that you incurred it, just like buying a piece of manufacturing equipment that might last 10 years, when you buy that piece of equipment, you don't expense that, $10 million of equipment in the first year. You amortize it or depreciate it over a series of 10 years, the useful life, right? And so instead of a $10 million expense, it may be a $1 million expense every year because you have benefit of it over a number of years. Same thing with R&D. So that $7 billion of R&D they spent in 2018, it's going to have benefit for a number of years. What I did is I modeled their R&D having benefit for a useful life of 4 years, right? So we're going to amortize it over 4 years. And what that does, it actually makes it so that expenses are less because you're not expensing the whole thing, you're amortizing over time. And so it makes your expenses less and your operating margins higher. And so in my evaluations, it made operating margins about 10% higher than what they normally were. And trust me, the math works out on this. You can Google about it, kind of Aswath Damodaran, capitalizing R&D expense, learn more about it. All right, enough said about that. We're going to have a long video again, I can tell. So tax rate, I'm assuming 25%. It's been a little bit lower, but just to be conservative. Net reinvestment. Now this is, I've said this before. Net reinvestment is the amount that the company has to, of earnings that the company has to reinvest back into the business to continue to grow it, right? So this is different from depreciation. This is like what you have to invest in the business beyond replacement reinvestment. This is like growth reinvestment, right? And so every business has to reinvest to grow. I'm estimating, and maybe I'll do a video someday on this and how you calculate it, but sales capital ratios is a way you can do it to estimate that. That's, historically looking back, for every dollar of increased sales, right? So every dollar of sale growth, how much capital do you need to put in? And so to get, this 0.75 is telling you you need to invest $1 to increase sales by 75 cents, essentially. So what this shows you is that they're investing quite a bit over the next 5 years, about $15 billion a year, I estimate on average. Then it drops down to about $6.8 billion over the next 5 years, and then drops down after year 10 to about $5 billion a year. So they're going to continue to invest every year a portion of their earnings to continue to grow. And you can see that as the growth slows, reinvestment need slows because you're not trying to grow as fast. You don't have to invest as much. So return on capital, this you can see that has been is at 34% now, and that is an adjusted number taking into account the R&D stuff. Excuse this notification on my phone. But I think that it's going to drop from about 34% down to 25%, which is still very healthy, but I think it will go down. Cost of capital that I used in my calculation, have it going from 9% down to 8% over time. So that means, what's Facebook's cost of capital, right? What its shareholders are expecting, what debt holders are expecting, although in Facebook's case, they don't really have any debt holders. They're pretty much debt-free and actually have a net cash balance of $40 billion, which I'll get to in a second. So down here, you can see all the numbers, how they line up. Free cash flow here on the right-hand column. The first one's 2018. It's not accurate because just don't worry about it. It's not important in the grand scheme of things. It's not the real number of free cash flow, but it's somewhat it's complicated. Just trust me. So you can see eventually we have free cash flow, which is the money that can be given back to shareholders, used for dividends or share repurchases. What you can pull out of the business without affecting the business, growing to 34, 35 billion eventually, kind of at a steady run rate is what I am assuming in 10 years. So you do a bunch of math, and again, I'll have to do a video on how this all works, but you've got terminal value, present value of terminal value, which is kind of like the residual value of the business after 10 years is 302 billion in present day dollars. The cash flows over the next 10 years, right? So if you added all of these cash flows here that I have, that would total 251 billion, but you've got to discount it back to the present because dollars 10 years from now or in the future are worth less than they are today. So in today's dollars, it'd be 146 billion. So you add those together, the 302 and the 146, you get the value of the operating assets. Another way to say that is the value of the enterprise. So the value of Facebook as a business is $448 billion, is what I'm estimating, right? If you had debt, you'd have to subtract debt from it. They don't have any debt. If you have cash on your books sitting in your bank account, you add cash, right? So the value of your business is 448. The value of cash is 41 billion. Total value 489 billion divided by 2.856 billion shares, and I come out with a value of 171.5 billion dollars. Or sorry, not billion dollars. $171.5. 171.50. And but see, as I mentioned earlier, I started this with my discounting factors and everything. We're assuming this was like at the end of 2017, because I actually started doing this valuation back in 2018 when I didn't have 2018 numbers yet. But now that we're done with 2018, I can fast forward a year, and so time value wise, I actually, when you do the math, the shares are worth currently $184.4, right? $184.40. So stock was trading at 162 today. So really, I think that it's undervalued by about 13.8%. So it's a little bit undervalued. It's not like crazy undervalued. So I think it's getting pretty close to fair value. Now, one thing to remember, what do I mean when I say it's fairly valued? That means that you would just earn the cost of capital. So you're a shareholder, you're demanding, another way to say cost of capital is required rate of return. So you're demanding 8 to 9% return a year. So if you were to buy it at fair value at this $184, I think if my projections are correct, which, there's a big chance that they're not, but if they're somewhat correct, you can potentially make 8% to 9% a year, even if you bought it at $184, right? If you buy it cheaper, then your potential return is even higher. So that's what it means when it's fairly valued. When it's undervalued, it just means you can make even a larger return than that cost of capital. If it's overvalued, it means you're going to earn less than the cost of capital. So just a little valuation lesson for all of you out there. So I hope you enjoyed this video on valuing Facebook. The last thing I want to say is, look, sometimes there's things that aren't captured by the fundamentals or the numbers that you can see. And you just have to ask yourself, do I think Facebook is going to ever do anything more than just like ads, right? Because that's where they get the bulk of their revenue right now. And actually, I can show you. Sorry, my stupid notification again. So while we wait for this to go away, as I was saying, are they going to be able to make money from anything other than ads, right? So you remember that $16 billion number for Q4? This is showing the revenue from non-advertising activities. And so you can see that it's very, very small, $274 million, a very small percentage of their total revenue. But you can see it kind of jumped up there in Q4. Maybe that trend continues. Things that Facebook is working on, allegedly, are things like e-commerce, payments. I've noticed if you go to Facebook Marketplace, and I had to buy a dryer the other day, they have a button in there where you can pay the person you're buying that from. So it's buying a used dryer, and you can pay someone directly now through there, just kind of like Venmo, right? So if they take a big or even a small portion of that big pie, that could be some real money. Other things, Oculus is not really performed like I would expect, but virtual reality could be a big area. I know they got a new Oculus product. I can't remember what it's called, but you don't need to hook it to a computer anymore. It's a standalone for about $400. So they're doing things there. Shopping within Instagram, I hear, is being tested so that people see something on Instagram. I think my wife would probably enjoy this, and they want to know, hey, where can I get that shirt? Then you can just click and purchase it directly from within Instagram. So I think that could be huge. I think there's kind of a debate on whether this will be a standalone app, Instagram app, or integrated in the native Instagram app. But there are levers that Facebook can pull, right? They've got $40 billion on the balance sheet, could do something transformative with that. So you've got to ask yourself, what optionality also does this company have? So maybe they continue their run-of-the-mill advertising, and I kind of laid out the valuation there. But I think there's potentially other levers they could pull to make a game-changing move. Anyway, I hope you enjoyed this video. If you did, leave a like or subscribe. I'm trying to build my way up to 1,000 subscribers. That's my goal this year. If you could help me out, that'd be great. I would welcome your feedback and suggestions on these videos. If you have a stock that you want me to value, go ahead and comment below. Have a good rest of your evening or morning, whatever it is.